Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Let's get you caught up on what traders are watching out there. US Treasury Secretary Scott Bessent and Chief Trade Negotiator Jamison Greer reportedly to meet China's top economic official in Switzerland this week in what could be a first step towards resolving the trade war disrupting the global economy. Meanwhile, Reuters reporting the US may deport migrants to Libya for the first time, despite Washington's past condemnation of harsh treatment of detainees. India attacking Pakistan and Pakistani Kashmir with at least 8 deaths reported according to Reuters. Pakistan calling the assault a blatant act of war, and President Trump has called the rising tensions a shame. And Japan's service sector activity returned to growth in April after stagnating the previous month, helped by improved orders, this according to a business survey. Let's get across the technicals. Chris Weston from Pepperstone joining me, and obviously looking a little bit backward looking with what we saw in the S&P 500 now that we are getting some momentum on these trade talks, Chris. But what did the technicals show us?
Well, they look. I mean, if you got the chart up, I'm not sure if you've got that there, but yeah, if you have a look at the daily chart on the S&P 500, there was about an 18% move to the upside. We got to 57.48. I thought we might get up to the 200-day moving average, which you can see in that sort of that blue horizontal zone, sort of around 58.50 was the area that I thought we would want to try and look to fade it into. We pulled back a little bit, back to the 5-day exponential, and then we've seen a nice rally through Asia today. So I sent the chart over before the headlines came out that we saw that the US and China are going to be meeting Switzerland by the end of the week. And that's obviously very constructive because every headline we've seen so far has been that the US were going to talk to China. China saying, no, we're not speaking to China or to the US. And, we didn't really know what to believe. There's a lot of noise and very little signal. But now we're actually seeing some meat in the bone. And especially that it includes Scott Bessent, who's seen as the sort of the grown up in the room from the market perspective. Every time he speaks, typically the market rallies. But I think, can we push back up? Can we get back into 5,800? It feels like the momentum's building again. We'll have to see how Europe and the US trade this. But I like the move, and I feel this is one that's been climbing the wall of worry. It's been the pain trade. The pain trade still remains to the upside. The technicals, after a period of sort of chop, are looking like they perhaps want to move back up to that 200-day moving average, and that's where I'd look to see what the world looks like around that, how price reacts around that. But earnings have been pretty good. 60% of companies who've reported, have rallied on their day of earnings, which is typically better than the 52% we'd see. The bar was low, but I still feel like people are saying to themselves that we're potentially still going to go into recession. That recession timeline's been pushed out. The Fed cuts have been pushed out. But I still feel like the upside level at the moment is where the pain is, and I'd still, from that technical setup, I think that we could potentially up to 5,800, 5,850 before a bit of a more of a reassessment there.
All right, well, what happens to gold then if recession fears are pushed out, Chris, and amidst potentially some optimism on the US-China talks? Does that mean that we see a bit of a retreat in the safe haven?
Again, this is a situation. If you look at the chart now, things have changed since this time, and obviously that is thematic of a headline-driven market because gold now is down nearly 2% today, and it's pretty clear from that review that we've moved back below that top yellow level there. So we're sort of very much at the face of a failed breakout, which can be very powerful indeed, and maybe suggest that we go back down to that recent swing low. But I think there's obviously, given the reaction today we've seen in the gold market, it's pretty clear that people have been hedging out some of that exposure against the US-China relationship, and the idea that the Chinese themselves have actually been preferring a currency appreciation rather than a depreciation, and that's something that we've been seeing across Asia more broadly. You know, we've seen that in Taiwan, we've seen that in the Singapore dollar, in the Hong Kong dollar as well, and a lot of these countries would have manipulated currencies or pegged currencies or managed currencies, should we say, seem to be appreciating, and they seem to be using their currency in some capacity to appeal to Trump through their trade talks, and that's a positive, and that's a gold negative in that capacity. But yeah, I think you may see a bit more heat coming out of the gold market in the short term. But there's one thing, trade talks, and then there's also a second thing, which is trade agreements. Trade talks I see very much like ceasefires. Trade agreements take longer to forge. And I think people will still be very skeptical about the trust that happens between a trade talk that comes through here. So I think just a bit of heat coming out. Going into this situation this morning, very first thing, everything was looking great. Bang. I like a market that's strong. I like to buy things that are strong. I believe that for short-term traders, following those flows is a really good way to try and put the odds in your favor. Right now, my alliance is I've taken some off the table on gold and I've switched it over into Bitcoin. So I think Bitcoin now looks absolutely ripe for a move up to 100,000. It looks very, very strong indeed there.
All right, Chris, what about the Aussie? I mean, we just saw it tick above 65 cents again on this news that China has cut the triple R. What does the Aussie do, particularly amidst the fact that it is this proxy between the US and China in a trade war?
Yeah, I mean, I think the relationship between the Australian dollar, you can see it looks pretty constructive. It's been, arguably since those lows we saw back in April, the best performing G10 currency out there. And I think, the relationship that the Australian dollar wears with multiple asset classes comes and goes, right? It's very rarely a reflection of what's happening in the domestic economy. We don't really, obviously had very, very little influence on the election. We don't really typically look at what's happening on the rate side. If you want to do that, you do it against the crosses. But this is, does it look at the Chinese yuan? If we were to see a further appreciation of the yuan, dollar yuan moving lower, then you'd expect the Aussie dollar to kick further higher. Does it look at the Chinese equity markets or the Hang Seng in Hong Kong, or does it look at S&P futures? Only in one given day you can see a very strong relationship with one or the other. So we're always looking at the short-term correlations. But right now, when the easiest thing you can do as a trader is just to see what price is saying. Price really for me is the only thing that matters. It's the only opinion that you should listen to. It's the aggregation of all flows, all beliefs, all behaviors. If it's going down and you're long, you're losing money, and it doesn't really matter. You've got to manage that. But right now, it does feel like this could kick. The US dollar's in a bit of a doghouse at the moment. It's not as bad as it was, obviously, but it's still finding a few friends. The Aussie still looks pretty strong at the moment. I like it higher actually against the crosses, against the pound, for example, and certainly against the Swiss franc. But right now against the Aussie dollar, we're seeing a much more constructive tone. To push up to 70 cents over the coming months, we're going to need to see higher S&P. We're going to need to see a continued strength in the yuan and lower volatility. So we'll see what happens there.
All right, Chris, always a pleasure. Thank you so much. Chris Weston there from Pepperstone. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au. The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.